NVIDIA is what we need to talk about. After setting a new high yesterday, it recently went down. What do you think will happen with NVIDIA the rest of the year? It's good for the stock to go down a little. I think it will take a break for the rest of the year before continuing its upward trend, as long as it keeps reporting strong earnings, which it has been. There's no reason to think that won't happen again in the future. It's easy to forget about NVIDIA's past as time goes on. Its market value was $754 billion a year ago, and it's clear that the company has been going through the roof. NVIDIA keeps making chips that are in such high demand that they can hardly keep up with demand. I wouldn't sell the stock right now. I see it as a long-term play. If you want to keep the stock for a long time, now might be a good time to do so. You can buy it when it's cheap when the market goes down, like today. The stock of NVIDIA is expected to keep going up by more than 100% each year. It's great to see you again. Today, we're going to talk in depth about NVIDIA, a giant in AI technology and a major player in the tech stock market. NVIDIA's stock price has been going up and down recently, and there are a lot of big changes coming up. We're going to talk about what's new with NVIDIA, how it's positioning itself in the AI market, and why it's still an important stock for tech investors to keep an eye on. We'll also look at how these changes might affect Tesla. In this video, we'll look at how the markets work for NVIDIA and Tesla, the creative strategies that are helping them grow, and what experts think will happen to them in the future. We're also looking at what NVIDIA's AI advances mean for society as a whole and how they compare to other tech changes. Stay tuned as we break all of this down and more. Thanks for visiting. This is the right place for you if you're interested in how tech and investment companies like Tesla and NVIDIA are changing the future. But first, don't forget to click like and subscribe. Hey there, and welcome to Tesla Stock News. Let's begin. Let's look more closely at NVIDIA. Its shares have been under pressure lately, even though they hit a new high yesterday. NVIDIA's stock, which has surged by a remarkable 2,000% over the last decade, suffered a slight pullback today. NVIDIA, known for its robust growth in the semiconductor business, recently underwent a stock split. This strategic move was aimed at making shares more available to retail investors, especially those without the option for fractional shares. Despite the split, NVIDIA's market value soared to a staggering $3 trillion, adding an extra trillion in just a few months. Analysts stayed bullish on NVIDIA. Jim Keller from Argus Research has raised his price target on NVIDIA to $150 from $110, showing a near 20% potential upside. Similarly, Bank of America's Vivek Arya holds a $150 price goal, viewing NVIDIA as undervalued. Now, viewers, this brings us to a critical talking point: investor psychology and market dynamics. With NVIDIA's rapid growth, some might wonder if there's buying fatigue or if profit margins could cause profit-taking. Arya thinks this might be a healthy market reaction. He suggests holding on to NVIDIA shares for the long term, capitalizing on any short-term downturns to strengthen your position. In many ways, this situation is a lot like Tesla's, another tech giant known for its rapid growth and groundbreaking inventions. Like NVIDIA, Tesla has mastered the art of using cutting-edge technology and smart market moves to solidify its place as a leader in both the energy and auto industries. Both companies show how important strong foundations, strong financial health, new product pipelines, and visionary leadership are for long-term growth that lasts. Tesla's path, like NVIDIA's, is marked by a set of brave business choices. Tesla has always pushed the limits of what's possible in technology and sustainability. For example, its advanced battery technology changed the way electric cars work, and now the company is also working on green energy solutions. Tesla's constant drive to come up with new ideas not only increases its market share, but also sets a high bar for competitors, similar to how NVIDIA controls the AI chip market. Also, Tesla's ability to deal with governmental issues, supply chain problems, and changes in the economy is similar to NVIDIA's ability to handle problems that are unique to its industry. Both businesses have shown that even short-term problems in the market can be turned into opportunities for growth and expansion if you have a strong base and are quick to seize new chances. In the tech industry, the stories of Tesla and NVIDIA support a larger theme: constant innovation, strategic planning, and strong execution are necessary to stay ahead and have long-term success in markets that change quickly. Today is a bad day for NVIDIA stock, which dropped 4% to end the week. Even though things are bad right now, one expert thinks the tech giant has a bright future and predicts big growth. Head of technology research at Milos Research, Ben Riss, has raised his price goal for NVIDIA again this year, this time to $160. This is the fifth time this year that he has done this. This is the fifth time this year that our next guest has raised his price goal on the stock. This time, he went from $125 to $160. Ben Riss is the head of technology study at Milos Study. Over the next 3 years, they can make more than $270 billion, but no one talks about that. That can help owners and keep the multiple pretty high for a long time. So far, they're the most close to perfecting AI, which makes sense since they've built an environment that developers love and know they can count on to grow. That's very important. Now that things have changed, NVIDIA is like the Microsoft and Apple of the past, but in one package. NVIDIA is still an important part of how technology changes because it is a leader in AI and GPU-driven technologies. Argus Research says that NVIDIA's great success in the last fiscal year supports a positive outlook. The company is expected to continue growing at over 100% per year for the foreseeable future. They are still far ahead of the curve in AI, just like Apple was when it switched from the iPod to the iPhone and Microsoft was when it turned its attention to work solutions. What really sets NVIDIA apart from its competitors is the way it plans to build a strong ecosystem that meets not only current product needs but also a community around its technologies. There are advanced GPUs and AI processors in this environment, as well as a full set of development tools that work perfectly with NVIDIA's hardware. By creating a platform that attracts and keeps top developers, NVIDIA makes sure that its technology is not only widely used but also constantly improved. This helps its goods last longer and be more successful in the market. Ben Riss points out that NVIDIA is at a turning point similar to those big tech companies like Microsoft and Apple have been through. Apple's move to mobile technology and Microsoft's move to cloud computing were both strategic changes that greatly increased their market reach and powers, setting new standards for the industry. In the same way, NVIDIA is moving its focus from making simple hardware to building more complicated AI and machine learning systems that are becoming essential to many new technologies, from gaming and cars to healthcare and smart infrastructure. NVIDIA's services and goods are important to the future of many fields. This wide appeal, along with NVIDIA's dedication to new ideas, keeps the company at the cutting edge of technology, similar to how Microsoft and Apple were in their own times. Vivek Arya of Bank of America said that NVIDIA's success isn't a fluke. He says that in the tech world, market winners usually own about 80% of their field. In the AI space, NVIDIA is likely to follow this trend. Arya also believes that generative AI will be widely used in 3 to 5 years, which supports a positive view on NVIDIA's stock. In addition, NVIDIA's business plans are also very interesting. Over the next 3 years, they should make more than $270 billion in cash, which could be good for owners. With this kind of financial health, high-value multiples could last for a long time. So, for our viewers who are thinking about NVIDIA's future after its recent drop, the advice from experts is clear. Either start investing in NVIDIA or increase your existing positions. This is especially true for tech investors interested in deep learning, AI, and GPU acceleration. It's not just a good time to buy. Now is also a chance to invest in a company at the forefront of a major technology shift, similar to how Apple and Microsoft were at key points in their own transitions.